Hello and welcome to our session on the varieties of tech capitalism. In this session, we also want to focus on Europe's approach and the varieties of tech capitalism. I think this is really interesting when we look at the digital industry worldwide, in the US, China and Europe, how we can keep up with this pace. And yeah, we invited 3 experts for this topic. First of all, I'm happy to announce Lisa Marie Fassel, the CEO of Female Founders, and Julian Teike, founder and CEO of WeFox, and Christoph Käse, also the moderator of and CEO of Axel Springer High. Fun fact, I'm always listening to his podcasts on Spotify, can really recommend. And now I'm happy to hand over the stage.
Thank you. Pleasure to be here. It's always great to be in St. Gallen, and compliments on everybody in organizing this. Really impressive. I'm sitting on a board with Thomas Rudolph. Pleasure to be here. Just visited the square. Amazing building. Congratulations on that one. And I also enjoyed the privilege of teaching at the MBEX program, so it's great to be here. Julian studied in St. Gallen, so he's alumni, sometimes he's getting Z's today instead of dudes. Very unusual feeling for you. And Lisa, she's Austrian, and you studied in Graz, did you?
Yes.
So we're talking about tech capitalism and Europe's role in the world and what regulation can do and what innovators can do to improve our position. And let's start off with Lisa. How good and how well is Europe faring as of the moment, as we speak, in tech capitalism? Are we good? Are we middle field? Are we lower third?
I guess, as in so many aspects in life, it's also always a matter of what you compare it to. Because in Austria, and I'm also active as an advisor to the Austrian government when it comes to startup policies, we always have this discussion, okay, so where are we in Austria? Are we worse than Germany? And if the answer is no, then everyone is fine in Austria. If the answer is yes, then everyone is like, okay, we need to do something. Where I sometimes feel like, okay, it's obviously nice to compare us to Germany and also to Switzerland, but this cannot be the benchmark from my perspective because we need to see things on a more global level. So if you would ask me about Europe, I feel that there is a thriving ecosystem. So when it comes to startups, when it comes to tech, and a lot of things are happening, still I feel that we're lacking behind in some aspects, and I think we have very big challenges coming up, connected obviously to the war and to the effects that are connected to this, looking at the funding landscape, looking on how investors are going to react, and also looking at young people who will potentially build companies who now feel that it might not make sense to stay in Europe, but to go to the US, go to Asia, go to Dubai, go to wherever where they feel, okay, there's actually the future. So I think our very old and very sophisticated structures, let's call it sophisticated, can sometimes be really, well, the opposite of helpful when it comes to fostering innovation and actually building innovative tech companies. So I think we have a lot to do, basically.
I like the word sophisticated structure. It has 2 meanings, basically complicated and very well thought through. Probably you mean both of them. So when you look at like Austrian successes like Big Panda, for example, really worldwide, Europe-wide success, are they kind of the exception to the rule, or are they an indicator of something bigger to happen?
That is an excellent question, actually. So usually, as I should be representing Austria, and as I'm obviously always encouraged to be like, it's so good and everything is nice that we're doing, I would have to say that's what the Austrian tech ecosystem looks like and that's what we expect, but actually they are definitely the exception. So I think that Bitpanda happened, and I really admire what they were doing from an entrepreneurial perspective because they've become so successful despite the fact that they are based in Austria, because what you would want to have as a startup, obviously have access to talent, have the access to money, and there we're definitely lacking behind to some extent. But I still see that it has a very positive impact on ecosystems, actually, because when you would have this kind of companies who are very successful in what they're doing, thinking big, attracting talent, attracting money, you're putting the country and also the city on the map, basically, and you're encouraging more people to actually become entrepreneurial.
Yes, and I think what we want to discuss today on stage and with you in the last 15 to 20 minutes is both entrepreneurial side of it and regulation side of it, because both are very, very independent, both are very important, and we shouldn't be tempted by just discussing regulation, because it's not politics that does entrepreneurial initiatives, but we should also not forget about it. Julian, when you graduated here, you didn't know what to do with your life. Everybody went to investment banking and to commercial banks or to insurances, you didn't know what to do, and you kind of stumbled into founding your own company. You founded many companies. You started with a Groupon clone, and then you moved on by coincidence almost, because a friend suggested, into what you're doing today. Maybe you want to say a few words about what WeFox is all about. It's an amazing success.
Well, we started WeFox 7 years ago. It's in insurance. And insurance is one of the largest industries in the world, and it still works like in the pre-internet era, so we thought we could do something about it, right? And so essentially what we've done is many of the tech companies back then, when we started it, InsurTech became like a hype, right? So many startups grew and wanted to disrupt insurance. Most of them said, let's eliminate the human being, let's replace the human being with technology. What we said is, no, 9 out of 10 insurance policies are sold by the human being. Instead of eliminating the human being, let's empower the human being with technology. And that's the WeFox story. We've grown now to 1,200 people across Europe. We're going to be at around 700 million in revenues, up another more than 100% from last year. We've raised around 1 billion in VC funding so far. Last valuation was around 3 billion. And now we're by far kind of the #1 insurtech in the world. I think our approach has proven to be the right one, but still we're just very early in our journey, in our grand scheme and grand goal of disrupting insurance on a global level. Right now it's only Europe, it's just a few markets, but what we do is basically roll it out globally.
You just mentioned a stunning number. You raised close to 1 billion in venture capital, which is amazing, because when venture capital really started out and the public debate started in Germany at least, 2014-13, there was less than 1 billion venture capital in the entire country in 2013. And now one single company, by the way, founded in Zurich and then moved to Berlin, one single company accumulates almost 1 billion in venture capital. So are things improving?
For sure. The entire tech ecosystem in the US has started to be built in the 50s, 60s. They are very far ahead of us. When did this whole tech ecosystem in Europe start? That was kind of beginning of the 2000s, to be honest. It was really credit to the three brothers, the Zamva brothers, who have kickstarted a lot of things. I think we should actually in Berlin build them a statue and thank them.
That's a good idea.
But unfortunately, they've been unfriendly to many people, and many people didn't like them. So if they would have been nice people, they would probably have a statue. Because what they did, they essentially showed that what is possible in America is possible in Germany, is possible in Europe. And what they started with was they saw eBay pop up in the US, and they said, okay, what we're going to do is we're going to create the German eBay, we're going to call it Alando, and we're going to just copy it. And when they want to come over to Europe, because Europe is a big market, we're just going to offer us for sale to them, right? And it was 6 months, and they made 50 million euros back then, and they said, oh, this model works, and they scaled up this whole cloning model from the US, and then selling to the original, and have succeeded in many businesses. And what this did was essentially, it got people from investment banks and consultants into the startup hype, startup world, and with that it laid the foundation for people to say, all right, I'm not going to go the career of investment banking or consulting. I'm going to start my own venture, right? And this first generation was followed by a second generation of founders. And many of them, or 3 of them, are now in the DAX in Germany already, from our little ecosystem. And 3 of our friends are now DAX CEOs, which is also weird. Yeah? But it's just the beginning, because the third generation of founders is building companies that are bigger than the second wave, scaling much faster.
Personio, Celonis.
Being global, right? They all will, as I say, flood over the DAX, and in 10, 15 years, there will be no more ties and suits in the DAX, right? It will be all technology companies. I mean, it's clear. We've seen this in other markets. And of course, we're far behind the US. But in terms of early stage, in the last 20 years, we've built up a great investor network and infrastructure. What we're missing right now is the late stage,
Yes.
right?
And it's a good point. And by the way, fun story, Alando and Zalando sound similar. Reason being, when they sold Alando to eBay, eBay renamed it to eBay, Germany, of course, and they had the naming rights for Alando. So when they started the online e-commerce store, they named it Zalando because they had the naming rights.
Because they copied Zappos. From
Zappos,
the US,
yes.
right? And they took the Z of Zappos and Alando from their first company.
Yeah, it's a pretty good story. And this, I'm very thankful for your answer here because it leads to a perfect kind of the crossroads of entrepreneurial and regulation. Lisa, when you look at European venture capital, it has been gone up phenomenally, which is great, but, and there's a big but, the factor between American and Chinese venture capital and Europe hasn't changed at all. So they grew at exactly the same rate that we did, so they're still much, much larger. World venture capital last year was close to 500 billion. 7 years we reached an incremental point in Europe, actually worldwide, when for the first time the amount of venture capital spent was bigger, became bigger than the amount of research and development spent by traditional companies. So there's the attacking money with venture capital is bigger than the research and development money from all traditional companies. Now, Lisa, question to you. The funding problem is also a part of the right side of the balance sheet. So where do all these funds get the money from? In America, it is wealthy individuals, family office, but mainly big pension funds. And here the insurance companies, they would be allowed to put in a couple of % of their investments into the venture capital system, but they don't do that. Last number for Germany, last year, 2021, it was 0.1% of the investments made by insurance companies went into the startup system. Politics is pretty frustrated because they are not using the amount they could spend. So do you think that government should intervene and force insurance companies to put more money into the system?
Excellent question. So now you're asking someone who's currently raising a venture capital fund. So I would
Is it difficult?
No, yes. So I was thinking about giving the answer for everyone who's trying to raise a VC fund. That is super easy. It's obviously not, because especially in times like this, no one knows what's going to happen. Everyone is worried what's going to happen with interest rates, what's going to happen with inflation, blah, blah. And especially venture capital is so risky, and generally we're living in a country where everyone is super risk averse. So I think there's been easier times, and we can definitely say this as a super early fund. So we're doing pre-seed and seed investments, and it's going to be a 20 million fund. But I think we're having not such a hard time as big funds. So I know a couple of funds in Europe who are currently raising 400, 500 million, and they are specifically addressing pension funds, etc., like the big ones who can really move a lot of money, and they are really reporting real serious issues when it comes to now raising the funds, because the Europeans are not that familiar with investing in funds, so there's a lot of whatever it is, where they're not getting involved in funds, so pensions, also foundations, etc., so basically where the big money is. So they usually used to raise the funds in the US, for example, or in Asia, but they are very hesitant to invest in Europe these days because no one knows what's going to happen with the war, as already mentioned. So they are in a more difficult position than us being a super early stage fund, raising mostly from individuals, actually. So should the government intervene? And obviously, I'm constantly having this kind of conversations with the government, because when you look in Austria particularly, the numbers are even worse than they are for Germany, which is just frustrating because there's so much money out there, but it's not getting invested in innovation, not getting invested in technology, but it's basically invested in real estate, which is not really helping us to build new jobs to drive the economy. And basically, so yes, I think there must be some sort of intervention, because otherwise it's just not going to work out. And seeing this, which is also part of the conversation here at the symposium, as an intergenerational topic, I want the government to actually do something about this, because I want money to be invested in a meaningful way and in something that makes sense, that will then have the positive impact of allowing me to build my businesses here in Europe and not go to the US where the money is, basically. So
what's your opinion? Jens Spahn, before he became Minister for Health, he was a state secretary, finance minister, and he made a very radical proposal, Conservative Party, CDU, very radical proposal a couple of years ago, saying that not only the private insurances should should be forced to put in a certain quota, but also the public insurances, Deutsche Rentenversicherung, force Deutsche Rentenversicherung to put 10% of their spendings not into a new shopping center and government bond, which is pretty much wasted because it doesn't end up in kind of technology, but rather be forced to put it into the startup ecosystem. What do you think about that? Is that socialism already?
No, I mean, so we are currently working our ass off for the pensioners in Ontario, right? And we're here in Germany or Europe, really creating amazing returns and supporting. And I love to work for the pensioners in Ontario, but I think we could also work for the pensioners in Europe. Essentially, when we look at the case of Canada, the pension funds are investing up to 10% of their assets into private equity and around 3% or so into venture, right? And we completely miss that culture, but we see these success examples. They are out there and they are easy to copy. What we see in Germany, unfortunately, is, and the government is a little bit helpless, and I'm talking to them a lot about this topic, is because the insurance companies could actually, also from a regulatory perspective, invest much more into venture. They just don't do it, and that's much more a cultural than a regulatory perspective. And that's what we need to work on, and I will try with my insurance company to be a very good example. So we're building up our first venture fund, nice. Very small balance sheet, but we're one of these movers and shakers, so we hope we can change a bit of that culture. I hope we can get at least the 40 billion that are the reserves from the Deutsche Rentenversicherung into venture, and I hope that we can get the pension funds to invest significantly more into venture, because we love to work for Singaporeans or for Canadian pensioners, but this is the best way to sustainably reduce taxes and build a sustainable pension system for Europe. And I think people have to understand that and act now.
Mm.
But do you think that people don't understand it? Because sometimes when I work with the government, and I assume the German government is quite similar to the Austrian government when it comes to this, I feel that people understand it, and it seems that they care, but they're just, I don't know, doing anything because of whatever reasons, because of party reasons or whatever, because of their beliefs, or because what we see in Austria, because they are really, really forced to not do anything by some sort of interest groups that are basically relying on the economy as it has been working in the past decades. And I think that this kind of mindset, not changing anything because it used to work and because it was what we are used to, is just not going to work in the future. And especially these days, we are under pressure. And I don't know why people don't get this, because right now it would be the time to act. Because yes, we've been developing quite nicely in the past 20 years, but we don't have 20 more years until we're basically catching up with the US, because they are also speeding up the processes. So the time is now to do something.
And the US has kickstarted Silicon Valley, right? The US government has kickstarted Silicon Valley. Defense spending due to the Cold War were something like 12-13% or so. So record numbers, and that was mainly sent into research that actually started Silicon Valley. So they were a Kickstarter, and the same role European governments have to take.
Yeah.
And one more interesting number, which might be relevant in that context, Klaus Hommels, the founder of Lakestar, German, but he lives in Zurich, he has done a study just half a year ago, together with McKinsey, analyzing where did the money come that funded the German Wirtschaftswunder in the 50s and 60s. It came from credit, obviously, because credit was at that point in time the prevalent kind of financing system. And Germany spent 4 percentage points of GDP on credit financing companies. And these were the years that companies like Siemens and Daimler grew to be world champions. Today, this number is down from 4% GDP to 1.3% GDP. Now, the problem is credit doesn't work anymore because the business models have changed. Because do you have a credit line for your company?
Credit? Yes.
But relation equity versus credit, how much is it about?
I mean, we're just raising a huge credit line. So
Okay, now let's make a little detour here. Are they asking for collaterals? What are you?
of course, yeah.
So what are the equity is collateral?
Well, yeah, equity is collateral, and it's because of our risk profile a little bit higher interest and stuff.
Okay, but still, this works for big companies like him. But just imagine you're Mark Zuckerberg, you're 21 years old, you just kind of dropped out of Harvard, and then you go to the bank and say, I don't have any collateral, but I need 4 billion to grow Facebook. It simply won't work, and most traditional banks cannot accept equity as collateral. It simply doesn't work. So the system doesn't work, system is broken, so venture capital is kind of it. Do you agree on that one?
Totally. I mean, there's this category of venture debt, right? And it doesn't really, I don't know.
Venture debt, it doesn't really fly here, right?
Doesn't really fly. So yeah, no, but I think the early stage is not our issue anymore. That's what I would say. I think we have enough money in early stage, enough expertise in early stage, and so forth.
Yeah.
What's really our issue is the later stage, the 100 million, 200 million plus rounds, right? So I think for me personally, that's the biggest challenge, because what we're seeing in the early stage also, and that also happened in Silicon Valley exactly the same. You have the first generation of founders that have exits, IPOs. They start then reinvesting it into the ecosystem, create the next generation. They start reinvesting it, and now we just recently had the first founders from our ecosystem actually do IPOs, have large exits, become billionaires, start reinvesting and stuff. Just a few years ago, right? So that whole ecosystem is really kickstarted. It's getting there, especially on the early stage side. But where we need more is on the late stage, and this is where the government needs to support.
I
Last remark on this one?
disagree.
Yeah.
Because I get your comment regarding the early stage, and that problem is sort of fixed, and that the big issue is now like when it comes to growth stage. But here comes the but. It works for exactly the type of people that you described. So you would have the first generation of founders, and then they're investing in employees and their friends, blah, blah. But those people who really have a hard time raising funding are first-time founders who don't have this kind of networks. And it's mostly women. Yeah. It's gender-diverse founding teams. It's people of color. And it's people from other aspects of diversity. And they have a significantly harder time raising money, because when you look at the European venture capital, 91%, so 91% of all the money in Europe from VC funds is going to all male founder teams. And this is not representing the reality out there of people who are building businesses, unfortunately.
Yeah.
Good point. Let's switch to another part of regulation, which is also very important, the non-financial kind of regulation. There's a saying that you hear. I was in Washington over the weekend for a number of meetings and events, and the one sentence you always hear is Americans innovate and the Europeans regulate. Which is, I mean, Apple these days is worth more than DAX 40. So one company in the United States, very innovative, has more market capitalization than all DAX 40 combined. So this is kind of the most damaging and frustrating number you could ever hear. That one company in the United States with great products is worth more in the stock market than all German DAX 40 now, not only DAX 30 companies combined. So, Lisa, what do you think? Is there anything? Is that an unfair assumption? The Americans innovate and we just regulate. So we export regulation. Is that kind of the stuff we export?
So there's this saying in Austria that Austrians have a specific way of approaching things. And for us as Austrians, everything is forbidden, and we're not doing something until it's explicitly allowed. And I think this is true for a lot of parts of Europe, unfortunately. We're really waiting for something to really be explicitly allowed before we do something. And I think that's a dramatic difference to what it is in the US and also parts of this world. I would not say that we export regulation, because I think regulation in some aspects can definitely make sense, especially when it comes to more ethical approaches. So I think there's different aspects to this conversation. But generally, I think part of our DNA, as Europeans in general, some countries more, some countries less, is not particularly disrupting the status quo, challenging something. And I think this is partly, and no, actually I don't want to sort of open this hole, but I think it's partly also connected to our education and how we educate people, because also at university we get trained to see a problem and then solve it and do what we are expected to do and what people want us to do, but we do not really dare to think outside of the box. I see this within our team, young people coming from the top universities from across the globe, and they are presented to a problem and they don't find solutions for this because they're just sometimes stuck because they don't dare to fail And then they either not do it because they're just afraid of failing, because they're afraid of the consequences. But let's face it, when you're building a young company, no one knows what they're doing. We have no clue what we're doing, basically. So we want people to think and to get stuff done. So yes, sometimes I think that we're lacking innovation.
But I think it's I mean, this can be a huge advantage for us, actually. So we look at the US, and we look at the turbo capitalism, and we look at what type of businesses this has created over the last 20 years. And we look at China, and we look at the surveillance system, and we look at what type of tech giants this has created over the last 20 years. And then we look at what type of companies do we need for the next 20 years. And I don't think it's the companies that have been created in the American turbo capitalism that do anything for money, and I don't think it's the companies that have been created in the surveillance system that do anything to support the power of the government. I think it is time for responsible technology. I think Europe clearly, and the regulations are an example of that, is clearly the thought leader here. And I think responsible tech based on European values can actually change the world to be a better place. And I think that's our opportunity that we have over the next 20 years. Because we look at just Germany, for example, the amount of people paying with cash is higher than anywhere. Why? Because our ancestors have experienced that they talk to neighbors, and this information was brought to the secret police, and they were arrested. And they know the value of privacy. We very deeply within our DNA have a different perspective on privacy. And I think topics like privacy and ethical usage of data will become key for the next 20 years. And I think this is the foundation for innovation coming from Europe, and why I'm a super optimist for Europe.
I think we have to be.
Well, let me try to just to be a bit contrarian here and put a bit of water into the wine, because I must say personally I'm pretty frustrated where we stand right now. Let me give you one simple example. The Russians bombed down the Ukrainian telecommunication system, shut down the internet. Who puts it on the next day? Elon Musk. How does he do it? He is South African born, he's citizen of Canada, his company is in America, SpaceX launches the rocket, puts in Starlink satellites all around the globe, produces antennas, has the antennas shipped over to Ukraine, and the next day the government is back online. No European company could do this. There's one competitor to Starlink in Europe, it's called OneWeb. It's a British company. By the way, they decided to do only the satellites but not the antennas, so even if you do OneWeb, you don't have the antennas. But apart from that, they are not part of the European Union anymore. So there's, within the 27 EU member states, there's not one single company that could have pulled off this stunt that Elon Musk did in Ukraine. And this cannot be the state of affairs, that in such modern technologies like low orbit communication satellites, we simply have nothing. But what we do have is the morale. And the ethics. This I cannot be satisfied with, because we are not selling. And maybe last example here, when it comes to selling ethics, Europe started first with antitrust against big tech, which is good. And now the Americans are catching up. The new Biden administration is really going after big tech now, which is good. But it doesn't make us any money. We cannot feed anybody on having this idea of antitrust approach against tech companies. So how do we get around, Lisa and Julian, how do we get around being kind of the good moral guys but starving, and all the others have future?
You're looking at me, so I'm going to start. So obviously, that's a difficult question. I mean, and there's no easy answer to this. Do I have the answer? Probably not. But I agree to what you were saying when it comes to, okay, so actually what's our USPs, but I still get that we need to make money with this. So comparing this to what we are doing to some extent at Female Founders, because obviously we're working with a minority, which is women, which is not a minority, but still a lot of people are asking us, so can you actually make money with this, and investing in diversity, it doesn't make sense, blah, blah. It obviously does, because the question is how can you actually combine something that makes sense, so that has an impact, as in our case, it's working with a diverse group of people, and how can this still be profitable? And there is a term that is actually coined by a German-based VC fund, and it's not tech capitalism, but it's basically impact capitalism. And I think this is sort of where we need to move to, still making money, still building cool businesses, building growth companies, yes, building our unicorn companies, but actually focusing on something that makes sense. And making sense in the concept of tech, from my perspective, is the core purpose of technology, which is improving the lives of people and making their life easier. And I think if you really find solutions to these real-world problems, there will be money out there. But this does not mean that we need to focus on things that are just good on the moral side and that they're philanthropy or whatever. But there needs to be a combination of this aspect of business and making money and still having an impact and doing something good. Because otherwise, and now I'm going to be like super straightforward, we're going to fuck up our planet, our society, and basically everything that we enjoy these days. And this cannot be the way going forward. And I know that this might mean that Europe needs to, well, take a step back, needs to focus on specific things. Maybe it's not growing as fast as other tech ecosystems, but I think this is a price that we all need to pay as a society, because it should be our common interest.
Great, Julian. And after Julian's answer, I will open up to the floor. So if you have questions, please frame them.
First of all, it needs to start in this building here, right? I was sitting over there when I started my studies in the auditorium, and then the professor said, look to your left, look to your right. One of you three will become an investment banker, one will become a consultant, and one of you will become nothing. Right, so essentially, so I call for everyone, all of the students here, go all in, take risk, build your own venture, right? There is people to support you on this tough journey, but we need to change our culture. We need to change our mindset. Yeah. So the second thing is access to talent. So get the best talent from around the world to come to this beautiful continent, because we have so much to offer, right? We have the oceans, we have the most beautiful mountains, we have the most beautiful cities, you know. So allow talent to come and work from anywhere within Europe with very little bureaucracy, in terms of taxes, in terms of where you can work from and where you can't work from. I mean, we could be remote work heaven, right?
Yes, we could.
So, and we could attract the best talent with our life quality here in Europe if we do it right in an aligned manner. And then it's capital. Really unlock the capital of the government and the pension funds. And with a cultural change, with being attractive for the best talent in the world, and with capital, we can do it. Yeah, I'm convinced of it.
And I think in theory
Optimistic.
we are. I mean,
Yeah, we do it. I mean, look at this. I mean, like, look at what we've created over just the last few years. You know, what type of businesses we've created, how fast they've grown. I mean, my dad is an insurance broker. He worked 30 years on building his own business, right? And it was like 300-400 people, and it was like a huge success, right? Because it used to take 30-40 years. Now, 7 years, 1,200 people, 3 billion valuation in such a condensed period of time to create something that used to take generations and generations. We have the talent, we have the people, and we have the possibility to build this already today. And we just need more people to do it, right?
You have a son?
I have a daughter.
You have a daughter. She
And
will
I-
beat you.
Yes.
That's even better. So questions from the auditorium, please. Number
Sorry,
one, number
I
two.
just need to make a last comment.
number
I'm very
three.
sorry.
Please
and then
go
we
ahead
to
and
the
we
audience.
maybe
No,
pass
because
the mic up here. Please go ahead, Lisa.
exactly what you were describing. So this kind of world that we want to have and what we want to stand for as Europe, this is exactly where regulation could come in to actually create this kind of world. And this is what we should actually force the governments to do, like also on a European level, to actually exactly build this. Because that's their role. As easy as that.
Good point. Thank you.
Is this on?
Should be.
Hello?
Yes.
Great. Thank you so much for being here today. This has been really exciting, and I want to dig in a little more on the topic of innovation and regulation. I work in space policy and in the US, and I've been interviewing new space companies to learn more about their regulatory preferences. And I would say I'm kind of getting feedback in two buckets. Either they like the minimal regulation that they have, it suits their needs and it makes their life easy, or for some of these more emerging companies, they're saying, actually, if the government would, publish more specific guidelines and standards, it would make it easier for us to go back to our investors or would-be investors and say, hey, look, we've aligned our long-term business strategy with the regulatory landscape, and you should invest in us. So from your vantage point in Europe, how do you see this relationship between investment and regulation, and how that might be evolving in the coming years?
Great question. Yeah.
Yeah, I mean, today is a mess with all of these different regulators, without knowledge centers. For example, I have an insurance company that is regulated, and there's absolutely no transparency, right? Yes, we're all under IOPA, but every regulator does it differently, and you know the Italians want this, and the French want that, and blah, blah, blah. And just to have, and I think that's a great proposal, on the different areas of regulation, a European knowledge center that gives, that collects all of the input from all regulators, creates a best practice framework, and then flows it down again and serves as a best practice knowledge center for example, startups. I think it's the best idea I've heard so far, and I know that there's a couple of initiatives in this area to at least not fully align all regulatory requirements across Europe, but at least have a best practice knowledge center that can kickstart innovations and be the go-to place for founders and investors.
Okay. You want to add to that, or next question?
Just a brief one,
Yes.
just a brief add-on. Love that idea. So I think what's important to also, well, when you talk about startups and tech, this is usually something that is completely new, and the government has no idea how to actually regulate this because it's just so different. So I'm a big fan of creating sandboxes where you just let startups do stuff and let's just try stuff and then see how you're gonna work with this from a regulatory side, because they're just not catching up.
Sorry. And then also one of the things is, you know, approach the regulator with innovative ideas. Don't be scared to not talk about innovative ideas and with the regulator. So, for example, when you look at how the vaccine was basically licensed within a year, which would typically take 10 years, it's not because of shortcuts. It's because the regulator put in place a 24/7 hotline for all of the producers, and typically how it would work is you would send a letter to the regulator, they would reply to the letter within 7-8 weeks and just have a little question, and it comes back, and you answer the question immediately, and then it's like 8 weeks again for the... So basically just by providing a 24/7 line with immediate answers, right, you're not cutting corners, but you're reducing the regulatory process by 10x, right? And I went to my regulator, I was like, listen, so we have a small one. We're in Liechtenstein. So we have 30 product applications, right? That's 3 times more than the entire market. It's not a huge market, but entire market has combined, right? So we're like, hey, we need that hotline. We're willing to increase our regulator fees, right? But you know, let's cut the time of back and forth, and just have immediate answers, and this way we can have real regulatory innovation and make this as actually an asset of ours rather than a burden.
Very good, thank you. Next question.
Hello. Yeah, okay, it's working. So my name is Peter, and I'm a student of EU affairs. So I was wondering, because we were touching very briefly on the EU's role in this topic. So obviously the continent is very fragmented. We have a lot of member states with different regulations. What do you think, under what conditions could this fragmentation become an advantage for Europe as opposed to the United States? Do you think we could benefit from that somehow, either in terms of a competition between countries, or it's just a disadvantage because of the market fragmentation as
Thank
well?
you. Very good question. Could you pass the mic on to the lady behind you, please? And who wants to go first?
Shall I go first?
Yeah.
I actually think that's a big disadvantage, to be very honest, because when you look at the US, you have one big market and you basically know what to expect, you know how consumers are behaving, you know what the regulation looks like. When you look at the European Union, you have all these different member states, and even if it's close to each other, even when you would look at Germany and Austria, it's completely different to some extent. And this does not make business life easy, and this is why you would also see the growth path of startups not being, again, starting in Austria, Germany, and then like going to every member state, but going from Austria directly to the States, because it just makes sense from a business perspective. So my argumentation, and this is also my political thinking, is that we should foster collaboration and not like go into competition between member states, because I just think that it don't make any sense, especially in a world that is getting more and more complex and where we see those big ecosystems coming up and them being in competition with us. So I think there's no point in competing within Europe, to be honest.
I mean, we need a single market, but there's like a mistake at birth, right, in structuring the way that the European Union works. We have no parliamentary democracy, and the European Parliament has no power, right, whatsoever. The governments, essentially have the power. What we actually would need is the power with the people. We would need a European, a true democratic European Parliament, and less power with the governments. What would need to happen for that is that the people in charge need to give up their own power, which rarely happened in the history of humankind. And that's why it's a very difficult challenge to solve, but this is where we need to get to, strengthen the role of the European Parliament.
Let me add one point. The most laws in Brussels are done by directive, and these directives have to be translated into national law within 2 years. And there are obviously a lot of differences, so the minimal consensus has to be met, but there are a lot of differences. But that's not the only way to regulate. They can regulate directly by regulation, and this is what they did in the case of data privacy. So the Datenschutzgrundverordnung, DSGVO, is a direct regulation by parliaments. It happens pretty seldomly, but they do have the power. And in that specific case, they have executed on the power, and now we have a unified system without 27 different interpretations of one and the same directive. So this might be, even without people giving up too much power, might be a way to go forward. Your question, please.
Thank you. My name is Teresa. I'm from Austria, a journalist from Austria. And if I understood correctly, you said 91% of all the investments go to all male founder teams?
Yes.
Is that correct? And I thought it was very interesting because when you talked about the next generation, the question immediately was, do you have a son?
Because he was the son of his father, that's why I'm asking.
I know, but still, my question would be, it was not meant offensive. Yeah. I have 2 daughters too. But my question is, what change in the mindset do we need that sort of women get a bigger piece of the cake? What could be done? What needs to be changed?
Shall I answer this question, or are we going to pass it on to the guys and see what they are thinking?
The guys.
Well, I'm going through this, right? My wife, she's a entrepreneur. She's a founder, and we just had our baby. It was really tough for all of us. I mean, it's tough to be a parent, right? What we created for her, and she's back 100% working, right? After 7 months or so, she was back 100% working. And what we created for her is just like, or what she created for herself in her company is full remote, right? Really having the possibility of having cultural, like just having the baby on the arm, breastfeeding while having meetings. These are all, really important cultural things that need to be implemented, right? Childcare. Us as WeFox, what we're, for example, offering is childcare at the office, families can bring their kids. So we just need to create significantly more family-friendly environments and need a cultural shift from what does work mean, right? I need to shift away from work means FaceTime, right, to work means output, right, which is possible for families with the right network and infrastructure. And that's what we need to focus on.
And maybe one more point added. I think there's a difference we made between funding and founding. And within funding, there definitely is a gender bias, probably also because investment companies, investment funds, etc., are mainly staffed by male people, and there might be a gender bias in that one, that males tend to rather fund male startups than female startups, and this has to be worked on. But the question that is most puzzling me personally, I did a number of podcasts on this issue, why are so few companies, 17% in Germany, 17%, founded by women? Is there a bias in founding? So is it more easy for males to register GmbH with the registry rather than for women? I did interviews with a number of women on that, and I found no woman said that there is some kind of discrimination in founding and registering a company. And I heard many women reflecting on the issues, whether or why is it that fewer women than men found companies. It's a complex issue, but I think it comes to the point of I don't know. I don't want to speculate here, but I think it's an issue. Funding and founding. Funding, there's definitely a gender gap, but founding, this is even more complicated issue because I met nobody who said that in modern, like liberal societies, there is a gender discrimination when registering your GmbH with the officials.
Which is good news,
yeah.
but I think the problem is actually somewhere else because it's obviously about mindset, it's about culture, and it's often this point in time. So when do you actually start a company? And when are the startups being started? Usually around the 30s, basically. And this is the point in time we're also thinking naturally about, do I want to build a family? And even in 2020, you need to decide, do I want to do this or do I want that? Because not all companies are that childcare friendly. It's not really being incentivized to go back to their job. So there's a lot of things, and there's a lot of structural things, there's a lot of mindset things. But I think the good news is every one of us and everyone is here in the room can actually contribute to this. Because I think what is connected to the mindset is that once you see women presenting their ideas, and this is true when it comes to VC pitches and investment pitches, but it's also true in our circle of friends. So when a woman is presenting, she would usually get questions of, are you sure that you can do this? And we get this question if we can actually do a VC fund. And my co-founder used to work 8 years at Speed Invest, which is one of the biggest VC funds in Europe. So also we receive this kind of questions. They would get questions if, is your vision really, like, is this feasible? Can you really do this? Don't you think that you are thinking too big? Because it's not what you should be doing. This is so much work. Are you sure that you want to work that much? Whereas a guy would get, your vision is so big, this is going to be huge. Take my money and just be successful. And this is really exactly what's happening. And this is proven by data and by research. And I think the problem is like super huge. But all of us, let's do something about this. When people come to you and ask you about your feedback on their idea, just support them. No matter if they're male, female, no matter what their background is, just support them and don't give them 3 reasons why it won't work, but just give them 1 why they should continue.
Okay, great. Thank you. We have time for 2 more questions. Could you please pass it on to the lady 2 rows behind you? Second to last question, and then 1 more last question.
Yes, I'm going to hurry. My name is Katerina. I'm the president of Start Global, the biggest student network in Europe for entrepreneurship and technology, based here in St. Gallen. And my question is to Julian. I think I agree with what you said, that the early stage startup ecosystem, in specific in Germany, has been growing. But we've also discussed we just need a next SAP in Europe. And it's nice to see all those great exits and then see the second-time founders found their next company. But what do you think could be concrete next steps, not only on the financing side, but on the entrepreneurial side, on the founder side, to get more founders to say, hey, I don't want to just have my great exit in 6 years, but I want to found the next SAP. And I want to go big and I want to go global.
I think it has changed so much already. I mean, like 15 years ago, it was like, let's copy a business from the US and just execute and sell it, right, to the original. Whereas now we have built global leaders in certain areas already. And I think the belief in what we as a tech ecosystem are able to do has changed significantly from cloning to true innovation. We are not yet in like the really deep tech AI innovation. I think that's the next stage. But I think the ambition level has increased tremendously due to having great role models that people aspire to. And I think that's the key, right? Having role models that inspire others to think bigger and bigger and bigger. And this is a cultural topic. Right, we do not have the American mindset here, and I think what it really requires, and that's what I try to do with my founders. I founded as a co-founder 6 further ventures in the last 6 years, where I really work closely with the CEOs. And I think the most important thing is look for a market with unlimited demand, and have a bigger than life vision, right? Really say, how can I be in this market with unlimited demand, the clear number 1 in the entire world by 2040, right? And don't start smaller, right? Yep. And don't give up on that vision, right?
So world domination is kind of the...
Well, it opens up the horizon. Yeah. It gives you new ideas, right? The way I fundraise is essentially... I say, what was the largest investment round of all times in my area at this stage? And I take that number times 2, and I go out, and I say, so for example, 120 million was Series B, largest ever, I said 240, right? 240 million, I'm going to do it. And then I start thinking about what I do with the money. not the other way around, right?
Okay.
So, and then you have, all of a sudden, you come up with ideas that you didn't have before. So think big.
Money first, idea second. Okay, great. I like the approach. Last question is to you, sir. Could you please pass it on?
Everybody should read Steven Schwartz on What It Takes, because that's exactly what he says. Go big. Sky's the limit. And I think this is what you touch.
Could you take the mic? It's kind of hard to hear. Yeah.
What you touch for women, this is the child care. I come from Sweden, so the child care issue is incredibly important. And we in Scandinavia have a good side. And from a cultural thing, I think that US, UK and Scandinavia are financially driven, while Germany, Austria, Switzerland, Italy and so on are all accountant driven. And it's a total different philosophy and perception of how to move companies. And I think this is very, very important. I raised enough venture capitals in Germany and so on, and it's completely different towards doing it in Sweden or in the US. Just the approach and how the questions are.
Thank you very much. Very important statement, and that's a great book by Steven Schwartzman to be recommended to everybody. Let's lose the last couple of minutes, and I want to ask you two, quite surprisingly, what is the best tech company in Europe, young tech company, except your own, Julian? Where should one put their money?
I think, the best tech company from Europe is probably not in Europe anymore, and that's one of the problems. It's an example of anyone can make it, right? No matter what's the network, what's the background, what's the infrastructure. It's UiPath from my perspective.
Really? UiPath?
UiPath from Romania. So they started off in Romania, right? Where there's no venture funding. So you can do it, right? And the sad part of the story is they went public in the US because of the structural issues we have in Europe. That needs to change.
So tech-wise, why are the best tech company?
Huh?
Why are they the best tech company?
I mean, they have
like from the tech stack.
Well, what they've been able to do is real deep tech innovation coming from Europe in terms of RPA, and they've done a great approach in terms of really building up substance before scaling. I think that's also a great example of they've taken 15 years or so of really building an amazing technology, right? And then click the scale button. And I think that these are companies that are really, really substantial.
Very good point. Thank you. And Lisa, final word to you.
Short and brief, it's an Austrian company, but I'm not biased. It's a really cool one. They're called Parity QC, and they're building the tech infrastructure for quantum computing, coming out of a university, Innsbruck, that is really good in what they're doing. And it's a gender diverse team. And what I admire about them is that they have some amazing investors like Hermann Hauser, who you probably know, like Cambridge Angel Investor, etc. And after going this angel route, they decided, okay, we're gonna not take any external money, not gonna go to this route, and just build this company and be successful and be world dominant and be successful over the globe. So
great, thank you, Lisa and Julian. Big hand for you guys. Thank you. And thanks to you. Have a great afternoon. Thank you for joining.
Thanks.